How you doing? I'm gonna let some people get in here. What's up? What's up? What's up? (6'9", waiting. Got you. I'm almost there. We'll just let some people get in here. I'm putting the link out so people can know to come join. Mauricio, what's up, brother? Absolutely. Every stream there's wisdom. The people that stay and watch, the people that tune in consistently will get the most value because they're showing up, and I'm making sure to put so much value in all these streams. Every video, I would argue the streams, the live trading and then the live streams like this are where you're going to get the most value, because I'll straight up go on rants of of gold. Like, my rants usually are packed with value. It's not just ranting. I don't rant for nothing. When I rant, it's something meaningful. And so the people that show up consistently and apply themselves and apply what they're learning are going to get the most value. Just like anything in life, when you really apply yourself to something and you outwork the other people, you're going to be in that 1%. A lot of things in life, it's not about being the best or the most skilled. It's about outworking the people around you. Taking the failures to the chin and just pushing through. Trading is no different. I'm not a good trader because I'm some genius, because I'm, just better than everyone else. I'm a good trader because I put the work in, right? I put the time in, hours on top of hours since 2019. The work I put in is undeniable. That's why I'm a good trader. It's not because I'm just born better or more talented, right? Important stuff to understand, man. All right, let's see if we can get some people in here, and then we'll get it going. Let me tell the Academy members as well. I watched all your model video on while I'm currently working on my psychology. Love that, bro. Build conviction in that model. Show up every day. Collect the data yourself, live data. Learn from what you're doing. If you manage your risk well and you manage your emotions well, that model is all that you'll ever need. It's extremely profitable. It has consistent frequency. It's simple and repeatable. So if you can master yourself, you're going to be profitable with that model. But you need to build conviction in it so that when you go through losing streaks, when you go through drawdown, you're able to have confidence through it, right? I made a tweet yesterday that said, a great trader is humble through winning streaks and confident through losing streaks. To be confident with my model, you have to build conviction in it, and you have to be able to put the reps in and know that you're going to lose sometimes. There's no model out there where you're not going to lose. You're going to lose consecutively in a row, and that's completely okay. But as long as you show up, build conviction in what you're doing, you're able to trade through that drawdown, manage your risk, and live to trade another day, pull yourself out, and be green at the end of the month or end of the quarter. That's all that matters. The problem is most people don't have conviction in their model. And so when they don't have conviction in their model, they'll go on a losing streak and they're going to deviate. They're going to want to change things. They're going to want to switch the model. They're going to want to, tell themselves that the model doesn't work, when the reality is, no, you're just on a losing streak, bro. It's probabilities. You're losing some trades. Numbers are numbering. Simple as that. But all right, let's hop on the charts here. We got dollar. You guys know the drill though. Before I even look at dollar, we're going to look at the economic calendar. But yeah, I would really argue the hardest part about trading is building that conviction, because that's something that only comes from cold hard reps, and people don't want to put that in, right? Most people don't want to put that time in. You have to show up every day, build conviction in the model through back testing, through live testing, and know your numbers and be familiar with the numbers to have confidence through drawdown. A lack of conviction means when you go on these losing streaks or you have bad market conditions that are unfavorable to the model, you're going to want to deviate and go jump to the new thing, right? Whatever that may be, whatever the fancy new concept that's out is, CRT, whatever the I don't even want to. All right, I'm not even gonna get going, but you guys get the point, right? Whatever the fancy new concept is, they're gonna flock to that, right? That's not how you're gonna be profitable consistently. Okay. So, economic calendar for the week, April 28th to May 2nd. Every single week, we're checking this. We're getting a feel for what the weekly candle is likely to deliver as, right? These news days, the days with red folder volatility, is going to tell us what days we're likely to expand, what days we're likely to consolidate, and it just gives us a feel for predicting that weekly profile to say, okay, these are the days that I really want to make sure I'm getting involved, and these are the days that I want to be more skeptical or just sit out. And so if I show up on a day where there's no news and it's clear to me that nothing's going to happen that session, I'll just preserve my mental capital. I'll be like, okay, it's a Monday with no news. I can tell that things aren't looking good today. I'm not going to sit here and stare at the charts for another 3 hours, right? So that stuff adds up. That's preserving mental capital. That's allowing me to put my focus more towards the days that matter in the week and not overexert myself on a day that I might not even get a setup. Important stuff to understand. So Monday, we have Canadian dollar red folder. Then we have Japanese yen, bank holiday. So you don't want to be trading yen or any yen crosses, right? Any yen pairs you shouldn't be trading on Monday. It's a yen bank holiday. So why would you want to trade any of your forex yen pairs, right? So cross that off the list. Don't touch yen pairs on Monday. USD has no news on Monday, which is interesting. Canadian dollar has red folder. So you could see CAD pairs potentially have some volatility to want to move initially on Monday. Tuesday, we have USD red folder, which is what I like to see as I mainly trade things correlated to the US dollar. Then we have Australian dollar red folder. So USD and Australian dollar look to have some volatility on Tuesday, which is nice to see. We have a good amount of USD red folder the rest of the week, which is always what I'm looking for. Because like I said, I mainly trade USD correlated tickers. Now, this is the first. Oh, no, it's not. Wait, yes, is it? Yes, it is. Yes, it is. Yes, it is. This is the first Friday of May, right? The first Friday of every month is NFP. I was going to say, wait, is it? Is Friday, May? It is, right? So the first Friday of every month is NFP. And so that's what I was about to say. I just had to make sure I wasn't spewing some incorrect information, right? The first Friday of every month is NFP week. And what do we have? May 2nd, the first Friday of May, is our NFP, right? So this week we have NFP. Usually NFP weeks are a bit more wonky for me. I'm a bit more risk off and skeptical of price action. But with that being said, I still will trade throughout NFP and up to NFP. I just won't hold through this. Obviously, I won't be in trades through NFP or any big three news drivers at that. And so we have a lot of USD red folder this week, and it looks to be a very volatile and juicy week for price action. This is what we like to see on our economic calendar moving into that week. So Monday looks like a dud. At least in my opinion, I'll be skeptical on Monday. Tuesday, we have USD and Australian dollar. Wednesday, we have Euro, US dollar, Canadian dollar, and yen. So a bunch of volatility on Wednesday. Then Thursday, we have a bunch of bank holidays. USD has red folder though, which is nice to see. And then we have NFP on Friday. How do you determine intraday bias? My understanding intraday where price is drawing to is by framing a narrative from the top down. So when we understand price from the monthly all the way down, that's when you can understand where price is willing to draw to next. So all this stuff is stuff that I really dive into and teach. It's about framing a understanding of fair value from the top down. What's up, Mega DFX Mind? What's up, bro? So dollar, what can we see? Major liquidity order pairing objective has been swept, right? We're respecting it right now. We have 3 days on this monthly candle right here, as you can see. What does that tell me? I'm favoring a close back within this liquidity right here, right? This liquidity objective, I'm favoring a close back within. Well, what do we have on the monthly as well? An open. Let me draw it over here actually and make it more clear. Whoops. Open, high, low, close, right? We have a bearish candle on the monthly. So what do we favor? We favor retracement to close this candle, right? We want to see this retrace back into the range, and that's exactly what we're getting. This monthly candle opened, put in a small wick higher, expanded, right? Distributed lower. Then they hit their objective, right? That order pairing objective. So that objective for the month was hit. And then what do we see? Well, price on dollar begins to want to retrace. Let's look at the daily, right? What do we do when we get there? Well, we consolidate, we hold up, we begin to want to retrace, right? So once that objective has been met, it's almost like saying, okay, monthly candle, you're good. Like target achieved. And then it wants to retrace and put in that close. So that being said, I'm favoring a respect of this liquidity, this order pairing objective, and I'm still, I'll have to look at the lower time frames, but based on this, I should be bullish dollar. We have this monthly SIBI up here that's going to be forming in 3 days. We're on the third candle after sweeping that liquidity objective. So all that was just pulled from the monthly alone. Weekly, sweeping external. We have a weekly SIBI up here. I'm favoring a retracement here. So yep, bullish dollar. Just off monthly and weekly, I'm bullish dollar. All right, so this wick, this weekly bullish candle is telling me the 4-hour and daily order flow is likely flipping bullish, pointing higher up here. Jeez, I don't know why I can't make a point. So this respect of this weekly external, 4-hour daily is likely flipping, pointing higher. I'm looking at the weekly SIBI as my draw. I'm bullish dollar. Just off that alone. 2 time frames, monthly, weekly. I already know I'm bullish dollar. Now I want to see the 4-hour and daily confirm that. I want to see them point and act as a compass. Right, so how do I determine my intraday bias, 6'9"? I favor these compass time frames and I use them in context of the higher time frame. So let me break this down for you. This is some real sauce, bro. There's 12 people in here. The 12 people in here are getting some sauce right now. Right? I really like to go in depth. For the people that show up and apply themselves, you're going to get the most value. And you're going to have those aha moments, right? You're going to get, this is like mentorship in these streams, and I do them for free. So sell side, order pairing objective has been met on that bearish OHL, OHLC candle, right? Open, high, low, close, right? Order pairing objective met. We want to see this respect and sweep that back into the range. Weekly external swept. Internal range liquidity, right? All I care about in price action is the most recent order flow, this leg. So we have the monthly sweeping a major sell side objective. We have the weekly with an internal objective as a target. So I'm favoring bullish price action. I want the weekly to offer fair value here. Trade towards that fair value gap. Now we drop to the daily in context of that. The daily is just consolidation right now. This leg is just straight chop. I want to see this continue higher and reach towards that weekly gap that we just framed, right? That weekly target that we have, I want to see the daily continue to reach higher. Right now, this is just consolidation. Okay, the 4-hour. How can we get there on the 4-hour? Well, we have this 4-hour leg. This 4-hour gap. all I really care about is here, an ugly 4-hour leg, but I want to see this respect this area here and create new gaps higher and begin to reach higher on dollar. So how do I frame my intraday bias? Well, I'm using everything in context of each other. Okay, what do I want to see the 1 hour do? I view this as all just engineered liquidity because I'm biased. I'm biased to the upside, right? So I want to see this eventually all get ran in some bullish dollar to the upside. That's how I frame intraday bias, by using everything in context of each other. So from the top down, I'm understanding fair value and liquidity. That's it. Bullish dollar, simple as that. Now use that understanding and apply that to majors. The bottom may be in, boys. The bottom may be in. I sent this out to Academy members. This is a 6-month chart offering fair value to a T. Beautiful respect of this area of fair value. I mean, that's exactly what you want to see. And if we just blast through this weekly SIBI, let me get rid of all this stuff because it's creating some cluster. If we just blast through this weekly SIBI right here, I'm looking at all-time highs. Not gonna lie, I'm looking at this thing to go right back towards all-time highs. I mean, I'm a perma bull. I say this all the time on indices. These markets are made to go up, right? So I'm perma bullish on S&P 500 and NASDAQ. There has to be something fundamentally wrong with our country, right? I'm from America, so I'm perma bull. America. But not for real. I'm gauging the respect and disrespect of this area of fair value on the weekly. If we respect this and begin to trade lower, cool. I'll trade towards this external until the 4-hour tells me otherwise. But if we just invalidate this and continue higher, I'm looking at all-time highs, right? I'm looking at the next buy-side objectives all the way there. So we're at this area, and right now we're respecting it. So we can see two things happen here on indices. Trade into the weekly area for value. Awesome. I was bullish all last week on indices. Okay, cool. All I'm doing here, really, really simple stuff, guys. All I'm doing here, drop into the 4-hour, and I'm allowing the 4-hour from here to confirm or deny this weekly gap. Okay. Do we respect this weekly gap? Meaning we flip on the 4-hour, we get our order flow flip and begin pointing lower. If that's the case and we get a crazy bearish reaction from here, then I'll look to short towards external down here. But if we continue to expand with bullish price action, meaning the 4-hour continues with bullish order flow, respecting fair value gaps and order blocks, right? Look at the respect of this. This is not random, guys. This is not random. This is everything that I teach. What do? Trade into the area of fair value here and wick it almost to the tick. Obviously not to the tick. You can see a little bit lower, but beautiful respect. These concepts play out every single day. For the people that are skeptical, just hop into the charts for a week and you'll see it for yourself. Okay, so beautiful respect of the area of fair value. If we continue with bullish order flow, ripping higher, just disrespecting this area of fair value on the weekly, I'm looking at this next liquidity target up here, right? So if we just continue bullish, I'm gonna continue with a bullish bias towards the buy side objective on the weekly. That's what I'll be gauging going into the week. So right now, just I'll throw it on the wait list for me to have a clear bias. I need to see either the 4-hour flip from here and begin pointing lower, or I need to see the 4-hour begin to disrespect this area here, and I will continue to look for longs. Boom, simple. So let me make this very clear. This is a gem right here. Every single thesis that I create has an if this, then that. Every single thesis that I create in these markets has an invalidation area. So if I say, I want to be bullish on the S&P 500. Okay, what's my thesis? If we trade into this weekly gap, if we trade into this area of fair value, then the 4-hour should continue bullish, right? If this, then that. If the 4-hour does not continue bullish and we flip and we have bearish order flow respecting this weekly fair value gap, then my bullish thesis is invalidated and I'm going to begin to look for shorts towards external down here. That would, obviously make me presume that this bottom isn't in. But I'm going to favor longs here with this momentum, with the close in. And until this 4-hour flips, I'm going to just continue to favor longs, right? Because we're just 4-hour bullish order flow, respecting area of fair value. So waitlist for me. Need to see that reaction from there. But it looks like daily, but it looks like the dollar is still in a downtrend. Right? This is where people get tripped up. Weekly, absolutely a downtrend. Monthly, strong sell-off. But we just swept a major order pairing objective. And what do these markets always want to do? They want to take liquidity and they want to offer fair value. Right? They seek liquidity, they offer fair value. Well, in my opinion, how I perceive price, how I teach people to perceive price with, very high accuracy is understanding that price has now achieved its liquidity target, its order pairing target. So what does dollar want to do now? It wants to offer fair value. So it's due for a retracement. So we may be in a downtrend, but in my opinion, dollar is due to trade higher. Now, do we trade higher to go lower? Or do we trade higher to continue higher? Well, that is something that I don't know yet. I have to gauge the reaction from my areas of interest, right? So this is how I frame my understanding of price around internal and external. Seeking liquidity and offering fair value. That's all internal and external is. NASDAQ as well, extremely bullish, traded into the area of fair value on the 6-month. Again, this is something I sent out to the Academy members. It just looked extremely bullish to me, and is kind of why I favored longs even down here when we were bottoming. Monthly, creating a bearish fair value gap, as well as the S&P creating a bearish fair value gap in 3 days. That is something also that we need to note and make, keep our eyes on. We very well could trade higher, disrespect this gap on the S&P 500 to trade into this monthly gap in 3 days. And then the exact same logic occurs for me. I need to gauge how we react from this monthly gap that forms in 3 days. So that's an important distinction to make. So how we react from those monthly gaps is going to be very important. But those don't form for another 3 days. So just waiting a little bit on indices, but should be nice. Should be nice, should be nice, should be nice. I would favor longs. I'm still long biased, gun to my head, right? I want to see higher prices on indices. I'll throw them on the wait list for now, but I want to see higher prices. And then from there, I'm gauging their reaction from these monthly gaps that form in 3 days and 5 hours. Same logic on YM. Monthly gap forming. Weekly kind of just chopping. Bullish weekly candle reaching for this SIBI right here. Same logic there. I want to see price reach for this and then ultimately begin to reach for this monthly gap is what I'd like to see. Daily, want to see this get invalidated because we have something to reach for higher. None of this is relevant to me now. This is old price action, old drawings from earlier. Just haven't updated it, right? And so that's what I would be looking at right now. I don't trade Russell or Dow. I just trade the S&P and the NASDAQ. But just do them on the forecast because people ask. By the way, guys, I have a full video on SMT dropping this Friday. So this next Friday coming up. So stay tuned for that. It's going to be straight sauce. Like, amazing video. Everything you'll ever need to know about SMT. When I make these videos on concepts, when I, just make full-on dedicated videos around things, I try to put out literally the best video on YouTube. Like my mmxm video that I have, I genuinely believe that's the best video on YouTube that you can find on mmxm. I think it's so good. Humbly, I think that is one of the best videos on YouTube, just value-wise and straight to the point. In depth, in detail, no BS. Everything you need to know about mmxm. So that's how I'm approaching SMT, and stay tuned for that video. Same logic on Russell here, right? We have the monthly SIBI forming in 3 days. We may want to begin to retrace towards that. I'm bullish through this gap. I think that we're going to invalidate these gaps on indices and begin to reach for this monthly SIBI. And then from there, I need to see how we react, right? I want to see how we react from this monthly SIBI. I believe that there will be a draw on the monthly that takes higher precedence, which is why I'm expecting these weekly gaps not to hold. And what do you see on these instruments? Well, we took a major order pairing objective. External liquidity. So what does that mean, guys? We want to trade towards internal and offer fair value. You see how simple that can be? It's unreal how simple it can be, right? It's complex. It's complex things that go deeper than you'd think, but it's just extremely simple. Appreciate that. Appreciate that love. Love, guys. I appreciate you guys, for real. I'm happy to help, man. I genuinely love just truly helping, because I've been there. I understand the struggle. I wish I had someone to shorten the learning curve for me, you know? I had to struggle for years. I'm happy to help. I understand the struggle. I understand how hard this game can be, because a lot of us tend to overcomplicate it and get distracted by other things. There's so much noise. There's so much BS in the industry. So happy to help, guys. Monthly expanding, third candle. Again, we're closing above in 3 days, likely above that liquidity objective. What did I say I was on dollar? I was bullish, right? So I'm going to be bearish on Euro USD and GBP USD. Same exact logic, just flipped. We swept external liquidity right here. I'll just go ahead and put it as that, right? We swept external. I'm looking for a retracement to internal. Well, what do we have here? That's our overlapping high, right? Right here. I'm looking for a retracement into this area, this weekly BISI, this overlapping. I want to see this offer fair value in the weekly on Euro. So this would be on the wait list. I'd be bearish in the short term. So I'll actually just put on the shorts for intraday, because with Harmony, I would short this to the weekly gap, and then later in the week, I'd long it from the weekly gap if things align. I'm bearish. Keep in mind, I'm bearish just to here. And then I want to gauge that reaction. The same way I'm bullish on dollar to here. Okay? So I'm bearish Euro to this weekly gap. External and internal, making things extremely simple. Extremely simple. Same logic on GBP USD. We still have that buy side objective up there that we haven't taken. We have this weekly SIBI right here. I'm bearish GBP USD to this unless we form some kind of SMT after hitting it on Euro. I'm bearish. Now your pound looks a bit stronger. I still think they should want to reach for this weekly gap. They tend to create a lot of SMT, so I always use Euro and pound together with Harmony. We want to see these tickers move in harmony with each other, hence the name. Ideally, you want to see one tag this internal, the other fail to tag it, create SMT, and then the two catch up and begin with higher prices, right? So bearish towards these weekly gaps on pound and Euro. Don't want to touch a USD or NZD USD. I don't like how they look. Weekly gap forming right here, sweeping that buy side. Liquidity may want to retrace as well based on dollar consolidating on the daily. Just a lot uglier, not something that I would be interested in trading. I haven't been trading these at all, but if I was, I still wouldn't be trading them right now. I don't think they look that good. Monthly SIBI up here, trading into this area, wicking and respecting it. Weekly gap again right here. Go ahead and remove that and this. Try to clean up my charts a little bit. I don't like too much on them. We have this weekly BISI as well, this bullish fair value gap. We can see a retracement into that. But I'm not interested in these. I don't think they look that good. This should get ran. This is a really nice signature to see for low resistance liquidity run to the downside, right? Some people see this as a wedge. I see this as engineered liquidity for sell side. I think that would create SMT for pound and Euro. Euro might go for that gap. GP. Right, I get what you're saying. Absolutely. That could definitely happen. Where Euro stings it because it's a bit weaker. Could absolutely see that, Chicago. Euro looks weaker. Weaker weekly candle, right? Closing bearish versus closing bullish. Internal right here. We could very well see this sting in. And then pound, and then pound failed to sting in. And honestly, that would be the ideal scenario to confirm this internal. Some SMT here, and then long that. That would be beautiful. Beautiful boundary as well to operate within. I like to call these boundaries for us to operate within, right? That's where you want to be framing your trades the entire week. This is the highest probability trading environment you'll find. This is where you want to frame your trades. So do you see how internal and external it's just the sauce, bro. When you understand it deeply, when you understand internal and external like it's the back of your hand, it just becomes, it makes these markets so simple. Very, very simple. Trading into this area, fair value, monthly, busy right here. Weekly, I am bullish dollar. So I'm going to be bullish USD CAD because USD is the base currency. So I want to see again a retracement towards that weekly SIBI right here. I'd like to see the daily and 4 hour confirm that. Again, another signature of these failure swings for us to run through. A lot of things are lining up for me and look clean. I actually like this for longs. This is pretty ugly consolidation, but in my opinion, just engineering all this to go higher. Need to see dollar confirm that and reach higher before we trade these, but other than that, these look really nice. Not a fan of USD CHF. We're trading into this area of fair value up here potentially. Daily gap right here. May want to trade into this to continue higher. Again, assuming dollar continues bullish like we speculate. Right, so assuming dollar continues in the direction we're anticipating, this should just continue higher off the daily gap. We still have this liquidity objective down here, this sell side on USD yen. We have this SIBI I want to see price sting into still. Very bullish weekly candle. Bullish dollar. So I want to see that get traded into right here. I'm looking at this weekly gap, internal retracement. This looks like a bag to me. I would expect this to probably have created 4 hour gaps. Yep. And so I want to see this hold, which it is. We've already traded into it and wicked it and respected it. So I want to see price continue higher here on USD yen towards that weekly SIBI right here. Bullish USD yen as well towards that weekly gap until we reach this internal, and then from there we're gauging that reaction on dollar. Right, dollar is the prerequisite. I almost said prerequisite. Dollar is the prerequisite. Damn, I can't say that word. Dollar is the prerequisite to trading majors. That word hates me. Prerequisite. But for real, you need dollar. You need an understanding of what dollar is doing before you look to trade anything over here with the majors, right? So your requirement is an understanding of dollar's direction before trading majors. The confidence of your trade and the success of your trade hinges on that understanding of where dollar is going. So before you even look to trade majors, have a clear understanding of where dollar is going. Trade when dollar is expanding. When dollar is consolidating and ranging, and we're just, if you look at a daily time frame on dollar, and we're just doing this, inside bar, inside bar, inside bar, inside bar, right? Probably a time to not look to trade majors and instead opt for another instrument, another asset class, right? So when dollar looks like this, don't touch majors. When dollar looks like this, look to trade majors. Dollar's expanding. It's bearish. You have a clear direction. You know what it's reaching for. That's when you want to be trading majors. So when dollar feels clear, majors should be clear, and that's when you want to be trading them. When dollar's expanding, same thing. The 2 and 2 go hand in hand. Crude oil sweeping that sell side objective, right? Major order pairing objective, like we always talk about. These liquidity objectives and levels are just so important to price action. Trading into this overlapping area, respecting it right now. If the 4 hour and daily flips and continues lower, I'll look for external here. I'm not trading crude oil. I'm not a big fan of it, you guys know. But this is a nice objective again for lower prices. I like to see all of this consolidation and these lows built up, right? These failure swings. because these failure swings become something like butter for price action to just cut through. Like, price action is a knife. When we have a low resistance signature in price action, it just cuts right through it. And that's when you see these big body bearish candles, right? These big body candles or these big body up candles if you see the inverse. So failure swings are a great signature to see from internal for a low resistance liquidity run to the opposite way. So assuming the daily and 4-hour flip and begin to point lower, I love to see that for the downside. Crude oil actually looks decent there, not gonna lie. I tend to hate on crude oil, but trading into this, the 4-hour and the daily failure swings look nice for a sell side objective. One thing I don't like is that the monthly is sweeping this, so that'll be interesting if we continue higher, because we already swept that sell side objective. But the weekly looks solid. Gold has been printing, right? When we understand inner market analysis, you understand why the money is in gold. It makes a lot of sense. Weekly, small fair value gap. Really sloppy week on gold. I didn't touch gold this week, obviously, because it was just consolidating. And this is the week you want to touch gold. This is the week you want to touch gold. This is not the week you want to touch gold. This is not the week you want to touch gold. Right? So when we're consolidating and we're failing to expand, don't touch the instruments. Daily flipped, 4-hour flipped, pointing lower, expecting this to continue to the downside. Right? We've offered fair value of this leg. Now I want to see this respect and reach for more lower. I want to see this reach for that weekly BISI down here. And then from there, we could have a really nice boundary to operate within for longs on gold. So I'll have this on the wait list, but this looks like it could set up something nice here. Let's look at silver in context of it. Silver is very, very different right now than gold. Usually want to see them, move in harmony with each other, directly correlated, but we're trading above this weekly SIBI, body close within. I ultimately want to see gold sting this, and then I want to see silver begin to continue higher and reach for this buy side up here. So I'm bullish on metals, but I need to see that, or I would like to see that weekly BISI get hit first right here on gold. I want to see this get tagged, this internal, and then I'm bullish metals, and we could have a really, really nice boundary from that gap, that internal range liquidity to external. So this is our boundary, our window of opportunity of high probability trading. That would be awesome to see. Bitcoin, I'm gonna add Ethereum, because why not? It's used for SMT. Someone told me to use the perpetual contracts. That's just what I do. Oops. I forget it's Bybit or Binance. I'm using Bybit. Little crypto action. I'm a man of the people. I don't touch crypto, but I got y'all. I know you want it. Always get asked about crypto. Monthly, respecting the internal, expanding. Do we have an internal to external move here on the monthly? Looking quite bullish on indices and Bitcoin. I'm beginning to see almost a correlation between indices and Bitcoin. When indices are pushing, Bitcoin's pushing. Expanded off this daily gap, irrelevant to me now. Do we have a weekly gap that formed? Not yet. We're on the third candle this next week. Could potentially see a more slow consolidation type candle to create this weekly gap on Bitcoin to expand higher off of. But it looks to me like we have a boundary now from internal to external on Bitcoin. Daily expanding, right? Daily has flipped. Very, very nice. Very nice, very nice. Let's look at them in context of each other, right? Bitcoin and Ethereum. Very, very different. Wow. Wow, wow, wow. It'll look relatively similar right now. The daily did flip as well on Ethereum, beginning to point higher. Expand off that daily internal. Interesting. I'm bullish Bitcoin. Ethereum looks wonky. I would definitely prefer Bitcoin longs over Ethereum. But assuming Bitcoin goes up, Ethereum should go up as well. So this is how I'm always looking at indices when I'm trading my Harmony model. I'm always looking at how I trade Harmony, just to break this down, right? When I'm trading my model intraday, and obviously you can swing Harmony too. Price is fractal. If you wanted to trade a swing version of Harmony, you can do the exact same thing. There's so much edge in trading this model because I'm understanding intermarket analysis, I'm understanding internal and external, and I'm understanding these tickers in respect of each other, and relative strength and weakness. So there's just so much edge there, right? I get an edge by understanding where the money is, right? What asset class is expanding. And then from there, I'm using SMT and internal and external to confirm those areas. And then I'm getting an edge from understanding, okay, what is the relatively stronger of these instruments and what is more favorable to trade? So there's just so much here with this model. I love it. It's my baby. And so what I do is I have them side by side like this. These are the settings that I use for it right here. So everything I can see, right? Ticker to ticker, or candle to candle on each ticker to compare SMT and whatnot at internal and external. And then intraday, I'm just trading them like this and I'm getting a feel, okay. Weekly. The S&P is trading into this weekly SIBI. Well, we're on the third candle again on the monthly, so we may want to retrace into this monthly SIBI up here, higher. So I'm bullish on indices. I want to continue to see higher prices into this monthly SIBI, and then from there, that is where I'm gauging. Do we want to continue to expand higher and trade towards all-time highs, or do we want to respect this monthly SIBI and actually continue lower towards external? So we need to see on indices. I'm bullish in the short term, especially in these last 3 days, and then looking for a retracement to internal, which makes sense because we took external and had a major order pairing objective swept and respected. So do you see how price goes from internal to external, external to internal? Liquidity, fair value, liquidity. Constantly. Constantly. So I'm only looking for SMTs to be created at my internal or my external key levels. That's it. Any SMT over here, any SMT that isn't in the current price action for me, it's just irrelevant. I don't care if there was SMT over here, bro. How does this help me? Let's see if we can find a random SMT. Okay. Just a random SMT that's irrelevant. Okay, right here. Look. I see people marking out SMT over here. How does this provide anything for your trading? I don't want to go on a crazy rant here, but I'm just saying, bro. All right, that was an SMT. I don't really. There's got to be an SMT here, bro. Okay, this is a bad example. That wasn't SMT. But my point is, people will be marking SMT over here. How does this serve your trading at all? Price action does not care about this right now. Now, on the monthly, this liquidity objective, absolutely, right? But this is in the current price action. So when you work your way from the top down and you're just looking at the most recent price legs, well, I understand that the monthly took this major liquidity objective. I don't need to look all the way over here to understand that. This is where people get lost. This is the fractal nature of price. So I'm already pulling that from my monthly analysis on the current order flow. So I'm only looking for SMT at the external and internal of our current order flow, the most recent price action where we're seeing institutions pair their orders, right? Mitigate their orders, whatever it may be. Very important stuff to understand, guys. This is removing noise. It's trimming off the fat. It's allowing you to frame your narrative and understand where price is going. So when you do these things and you make trading as simple as possible, you can focus on the things that matter. Building conviction in your model, managing your risk, and managing your emotions. When you do those things, you will find profitability. That's it. Simple. That truly is it. There's no holy grail. The holy grail is having conviction in an edge and then managing your risk and emotions. So until you can detach and build conviction in a model and not get shiny object syndrome and go jump to whatever the new concept is, I don't know what else to tell you, because there's no holy grail. There's no new concept that you're going to find that will change your life. The reality is you need to embody the person that can be profitable with a model. There's so many edges out there. I laid out for free in a course, right? I have a Harmony free course. I laid out for free in a course the model that I trade. I have an academy where I teach exactly how to trade. It's all out there. But until you embody the person that can trade the model profitably, it doesn't matter what model you have. You could have a 90%, 95% win rate with a model and still lose money. So focus on embodying the person that is profitable with any model. Build conviction in the model, manage the risk, and manage your emotions every single day. That's it. That's what I teach my students to do. That's what is going to move the needle for you from profitable or from unprofitable to profitable. That's what moves the needle. It's not the next concept. Everything that I'm showing you, everything that I display every single week is all that you need. It's all that you need. I genuinely, humbly, again, let me preface this, humbly, I genuinely believe that I can go toe-to-toe with anyone in terms of understanding price, doing TA, I don't need anything else. And if you look at my charts, I have a gray box and a gray line. I have a gray box and a gray line on my charts at all times. Show me something else that I use, please. But yeah, all that to say, just don't make it harder on yourself and focus on embodying the person that can make money and detach from the money. Because ironically, once you stop caring about making money and you detach from making money, that's when things start to click. Focus on showing up every day, executing the model when it says to execute, managing the risk and managing your emotions, and the rest just follows. That's it. It might not be what you want to hear, but that's the reality. That's what's going to move the needle for you. So yeah, I mean, if you want to learn more about the Harmony model, if you want to be mentored by me or be in the academy, I offer that. If not, it's all good, right? I offer free content as well for the people that are just looking to learn for free. That's why I do that. I love to teach and I love to help, because I know the pain, man. I went through this for years, right? I went through the ringer. It's been a minute, man. I've been here working at it for quite some time now, so I understand the pain. But yeah, guys, I think that's pretty much it for the forecast. Had a nice little rant there at the end. But yeah, if you want to join the academy, man, tap in. Here's the link. Free trial, 7 days. You can live trade with us. Pretty much rants like this, things like this that are actually going to move the needle for your trading every single day for free. 7 days. And if not, all good, right? New videos, free videos on YouTube coming out. I'm really trying to start posting a free video on YouTube every week on Friday. So this Friday, new video fully diving into SMT. I want to put out the best video on SMT there is on YouTube. That's the goal. Every video I put out, I'm shooting for that. But yeah, guys, that's pretty much it. So for those that tuned in, thank you for doing so. Continue to apply yourself, apply the things that I'm teaching, and things will begin to click. Just you have to have a blind faith in the beginning. It's like there's a light at the end of the tunnel you can barely see, and then as you move closer and closer to understanding price and you put that chart time in and you get the reps in, it's like the light gets closer and closer and closer, and then finally you emerge from the tunnel and things fully click. So I can't wait for you guys to have that moment. But yeah, have a good rest of your day, guys. Enjoy it. Thanks for tuning in.